The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. The first chart that I posted into the Tiger's Den today was the long-term chart, a weekly chart of J.P. Morgan that Basil has been talking about before. Basil. Sorry. My apologies, Basil. I'm Italian. Remember, I use these herbs all the time. Anyway, it shows that it's made that 61% retracement off high from, way back in the 1990s. So, and just made a beautiful ABCD. So I don't think Morgan's going anywhere, but down. That's yes. But we'll just have to wait and see. The second chart that I posted into the Tiger Den is the chart that we talked about yesterday. That was the live cattle chart, and that has moved very nicely so far. It's up almost $1,000 from where we originally bought it. We're going to have Rich Anderson on at the break at the 12:30 hour because Rich and I had a long conversation about ETFs yesterday, and I learned a great deal about that stuff yesterday. So Rich is going to share some of that with us at the 12:30 level. So that's the thing that I would like to be watching, and we'll see how that works out with Rich. But I know we'll have a good time doing it. The second thing that I wanted to mention is that we've been in these watching the gold and silver for quite some time now, and we really need to take a look at what's happening now because gold is taking out the highs that we made from several days ago, and silver is also, taking out the highs, and it's starting to catch up a little bit, with the gold, and that's the real the real exciting part. But we really need gold to get above the 1625 level. If we can do that, then we've got a real chance of gold to move. Now it's moving very slowly, and that's good. We have some nice pullbacks. They're small ones, but they do have $10 and $5 and $10 pullbacks on these intraday charts. Yesterday we had one down to that 1600 level. But I thought the better place to buy gold is if we get a reaction down to that 1590 level. That would be the best place to look at it if you want a short-term place to buy it with a reasonable stop, because here you've got to risk about $30 buying gold if you want to buy it for the long pull. But so far it's holding up okay. Hasn't ran away, but the rhetoric that you hear in the news is exactly what that is. That's rhetoric. It doesn't mean anything. I had two interesting experiences today that I have to share with you. One was from a friend in London that spends a great deal of time looking at the markets, and is extremely good at picking highs and lows. And the problem is that person goes in and always picks the wrong trade. It doesn't do every trade. Watches 5 or 6 different things, but only picks the one thing. And the one thing that she picks is always the wrong thing. That belongs in the neighborhood of trust. You have to have trust in what you're doing. Bobby Knight was a guest on CNBC yesterday, and I happened to listen to him because I happen to know Bobby Knight. His assistant coach for many years at University of Indiana was Ron Felling, and Ron was a very good friend of mine, and we hung out together for most of our childhood and stuff. And so I did get to know Bobby Knight, and he has a new book out, and he has 4 premises that he talks about in order to be successful. But he said the 2 most important were preparation, that you really have to prepare, and the person that prepares more than the person that doesn't prepare is the person that is going to succeed. This is the same thing that John Wooden, the great coach from UCLA, talked about. And you have to do that in your trading, is you have to prepare. But After that, you have to have trust in the game plan and everything else that you have to put out. I mean, that you have worked on. You have to really believe, that these things really work. I've been doing this trading stuff for many, many years, and I've watched these patterns, and I believe them, beyond anybody's wildest imagination how I believe them, because I've seen them work. Now, does that mean that I'm right every day? No, it doesn't. But it does mean that you've got to be consistent, and you have to do your preparation. If you do your preparation correctly, and you trust in what you're doing, and part of that trust is knowing what you risk, because you can never trade without a stop. If you do that, you might as well quit this business and go into flipping burgers at McDonald's, because someplace along the line, the market's going to spank you and spank you badly. And if you don't learn lessons from that, you're doomed to failure. But trading is not that hard. You want to be buying higher bottoms if you're in an uptrend, and selling lower tops if you're in a downtrend, and that's basically it. So my advice to the person in London was to learn to trust what you're doing. I've watched the signals that they give me, and they're really very, very good signals. But the problem is she's only picking the ones that are losing, because she's not preparing herself for what she really needs to be to be doing, and that is to do every trade, because it's a game of probabilities. I mean, we don't know which trade's going to work and which one's not. So that's the bottom line. So keep in mind, folks, don't be hard on yourself with doing this. A lot of people have tried it and failed. A lot of people have done it and done okay with it. So it's going to be real interesting to see. I had a really great call with Rich Anderson last night. We were chatting about the ETF, and he gave me a really great compliment. He didn't know it that he did it, but he has a lovely 30-year-old daughter who is an attorney with international law. She's incredibly well-educated and does extremely well, but she wants to get into trading, and I'm going to be able to be the one that is going to help train her. The worst thing you can do is try to train one of your kids to do this, because they don't listen to you as a trader. They listen to you as a parent, and that's a totally different animal. So you just have to remember that's when you try to do that with one of your siblings, it's a lot different than what you might think. Okay, we've got to the gold market has held up relatively well in this area. Like we mentioned, it's making the higher highs from we did 4 or 5 days ago. We've had higher lows, all along this time, and that makes it very, very bullish from what I think in just a short period of time. Just looking at it, I'm trying to do a daily chart here quickly, just to give you an idea of where we are. Let me get this posted here, and then we will be okay. All right. Anyway, someone's asked a question about that COW, that ETF for cattle, and I'm going to have Rich on the show at the half hour and talk about that, because that's not a good thing to trade, folks. It's up, it's up a bit from where we talked about it yesterday at that 25.60 yesterday. It's around 25.90, but that's not a good thing to trade. It's much better to trade the live cattle futures, in my opinion, but we'll see. Anyway, the gold has had higher bottoms since the 19th of February. We made the retest down there at 1566, and as long as we can hold that 1566 level, we're going to be okay. Now we're getting a little bit overbought in the gold market in here, and we've took out the high of the last couple of days, which is good, but we really haven't gone any direction from there. Went up to 16.17 and backed off to 16.10, so just a $7 move, so it's really nothing. But we need some thrust to get out of here, because if we don't, we're going to be looking at another pullback, probably into the 15.85 to 15.90 level. Most of this will be the excuse of what's happening in Cyprus, but that won't be the reason. The reason is the fact is that these are just normal cycles that are there. We don't know all of the cycles. We know a few of them. Some of them we know better than others. Sometimes they work, sometimes they don't. But that's all we're really looking at when we're watching these things. We're just looking at the probability of looking at these things of what we're watching. Now there's because this is a commodity show, I want to spend some time here with one of the commodities that we've been watching for quite some time. That is really related to the to the commodities and the stock market, of course, and that's the the copper market. We've been following it for a great deal of time here, and we've had so much divergence between stocks and the commodity market with copper. And we've gone down, and we've just about completed a beautiful ABCD down here at this 338 level. So copper is very oversold, and we could get a rally into this area. And that doesn't mean that the stock market's going to go up, because these have been totally different. It just means that we're getting very oversold in copper, and we're getting near a target. So you've got to be very, very careful. But long term, copper is just absolutely super bearish. I mean, it has bearish implications that go beyond belief, in my opinion. But nobody talks about this. I mean, they talk about how stocks are going up all the time, but they don't talk about why is copper going down, why is palladium going down, why is platinum going down, why are some of the other commodities going down, like wheat and rice. Even rice has had a big break here recently. So these are not inflationary things, and with the Fed putting $3 trillion or so, whatever they've done with QE3, I don't know what the amount is, but that should have really sent some of these commodities up to the moon, but it in fact didn't do that. So we'll have to understand that from our history lesson that'll be taught to us in the future here. It was interesting. I did listen to Bernanke's replay of him speaking last night, and I used to laugh at Greenspan because he was really funny. He used to pride himself to talk in a ways that no one could understand him, and he did it absolutely incredible. Bernanke is more clear and precise, and someone asked him, how are you going to get out of this QE2 and QE3 situations you're in? And he said, well, we really don't know because we've never done this before. I couldn't believe that I heard this, and none of the reporters even challenged him on it. I was really shocked. I thought, would someone say, well, how could you do something that's never been done before? Isn't that a little bit risky? But in fact, no one said anything, and so that's it. So we'll see. Remember, he's a college professor. When I was doing my graduate work in Indiana in my MBA in finance and stuff, John Galbraith, the great economist from Harvard, came to Indiana to give us a talk. He was a friend of Charles Schultz, who was the dean of the school there at the time, who later became secretary treasurer under, I can't remember the president. I think it was Johnson. But anyway, it was Johnson. And he got up in the class, and we were doing an MBA program, and he said, kids, he said, I got to tell you something. He said, you'd learn more about going short one contract of soybeans than you will in this whole 2 years of the program that you're in right now. And he says that'll teach you what risk is all about. It'll teach you what capital preservation is all about. It'll teach you what supply and demand is all about. Anyway, that's it, folks. We're going to take a little break here, 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I've posted into the Tiger Den the gold-silver index. By the way, those of you that are out there listening that are looking for a place to, meet other traders and get some really good trading ideas, the Tiger's Den is really a great place. There's some really smart people in there. It's a good teaching forum all day long, and it's really very, very interesting to go in and watch it. I try to get in as often as I can. Sometimes I don't, stand in front of the TV very much, or the monitor, so I don't get in as often as I do, but you get some great ideas. Now, I posted the gold and silver long-term weekly chart in here, and what's really important about this is that the high that we made on the last rally was a perfect 61% retracement of the high from 2011, and the low that we just made 3 weeks ago, when we were, really, really bullish the gold down at that 1560 per ounce level, that was at the perfect 61% retracement. Now, that's a pretty large index. It's traded very heavily, and the fact that it hit both of those numbers absolutely perfectly really means a lot to me. So as long as we stay above the 128 level in the XAU, it looks to me like we really have a chance, for gold and silver, to go a lot higher. You have to remember, folks, that gold is a very emotional market. It is really once it starts, it takes emotion like you've never seen it. I made most of my I don't know what you would call it, the important part of my career when I was at Drexel, being long gold and silver from 76 through 1980. But I was long a lot of stuff, and I was short some stuff too. But gold was the big one that I was in because I did a lot of personal hedging for the coin dealers and refiners, that I had worked with, and so it was really good. But one of my favorite stories was one of my largest accounts was Gene Roddenberry from Star Trek. His goddaughter was my secretary, and she had went to Beverly Hills High. She was one of the girls for that 90211 series that you could have posted her for it. She was Gene Klein's daughter who owned the San Diego Chargers, but Connie was a really smart girl. And Roddenberry came in, opened an account one day for $3 million, and he bought 500 Cougarans. And this was when they were trading at around $300 a piece. And when they got to the 700, I talked to him about hedging them. And he said, yeah, that sounds like a good idea. So he opened up an account for $500,000, and we put the hedge on. And, of course, gold ran another $160. And he saw one day that that his hedge was that he was down $175,000 in his $1 million account, but he was also up the same amount in his Cougarans that he had. So he hadn't lost anything. I went over to the office and I tried to explain to him. I said, look, you haven't lost any money. You're dead even. He said, yes, I'm losing. Look. I said, no. I said, Gene, you've got Cougarans that counteract that. I tried for days and days to get it. Finally, he takes off the hedge on January the 15th, I believe. That was the Thursday before it topped on the 20th of January, 1980, and he never looked back. It wasn't a lot of money to him. It was really a small amount of money, but I always remembered that, and I felt really bad that I was not able to explain it to him that he was not losing any money when he was hedged like that. And then gold went down to $300. I had a car that year. It was a little sports car, and I had a license plate that said 300 gold, and I still had those plates somewhere there in California. But it was funny because I thought gold was going to go to 300 after it hit 800, but frankly, I didn't short it all the way down. I can promise you that. But anyway, gold has a real chance here, folks. And silver, being the wicked stepsister, has a chance to get moving in the right direction also. If you stop and think what's going on in the world with this Cyprus thing, it really means a lot as far as I can say, because when you try to take money from people that have worked for it, and and if you listen to what the news is, and it was basically instigated by Germany and France, this is not how you build confidence in banks, folks, and that's what the problem is. And we haven't seen runs on banks, since Argentina in the late 1990s when they, devalued against the dollar, and you don't want to, be involved with that. I was involved with the Mexican devaluation during 1975 when they were giving 16% interest rates in Mexican banks, and that was really good. But the next day when you came in, your 16% was only worth 10 cents on the dollar because they devalued by 90%. And so if you were holding Mexican pesos, you lost 90% of your money. So that's why a little gold and silver is good. Okay, folks, we'll take a little break here, and then Rich will be back. 877-927-6648.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, and I believe we have Rich Anderson from Anderson Capital Management on the line. Are you there, Rich?
You bet. Hi, Larry. How you doing?
Hey, good. Listen, I was telling the folks that we were chatting on the phone last night, and you were telling me about the ETFs because I saw the discrepancy between the COW, which is the ETF for the cattle and hog futures, and how it was just totally opposite of what happened in the markets. And then you told me a couple of stories about other people that have used ETFs. I was wondering if you would share with our listeners, pretty much the same conversation that we went through yesterday. Could you just give us your idea of the ETFs and stuff and some of the stories that you have behind it?
Well, I mean, ETFs are a good vehicle for somebody that doesn't have the capital to trade futures, but you have to know what you're dealing with. And as an example, a friend of mine in Sarasota called me up one time and said, well, I'm going to do the triple long ETF in oil. Well, and they had a double long and a triple long at the time, and oil prices went straight up that year. Now, they would work for short periods of time if your holding period was 2 or 3 days, but because they reset, each ETF you have to read the prospectus, but because they'd reset at the close, oil prices went up, 80 or 90%, almost doubled. And that particular ETF, because of the way it was formulated, only went up like 7 or 8%. So he was big time right, but he was in the wrong vehicle.
Pardon me?
He was right about the market, and the market moved enormously, but the vehicle he was in, because of the way it was set up, they would start from zero each day. It wasn't accumulative, so he didn't make very much money. He only made 6 or 7% rather than 80 or 90%.
Well, what does that mean by resetting, though? I don't understand what that term is. That's something new to me.
Well, in that particular ETF, let's say the market was up $1.50. Okay, so if you're in for yesterday's $1.50 move, you got that $1.50. But now today, it starts at zero again, and it wasn't a cumulative thing. It was
wow.
It just was a strange thing. So you have to. Now I haven't read the prospectus on the cow as an example, so I don't know how many months of the hogs and the cattle they're using. A lot of commercials, as an example, if they're selling to national retailers, will use a cattle strip. Okay, so they're using the 5 different months to make a price for the next 6 months or the next 12 months. And I'm assuming that in this particular ETF, they probably use some of the cattle, some of the hogs, and I don't know how many of the months they use. We'll take corn as an example. There's a tremendous difference in price right now between the old crop, the May or the July, and the new crop, the December. And we have a major acreage report on the 28th of March. If the acreage report says we're going to plant 98 million acres of corn, which it could easily do, you could see new crop corn go down towards $5, and the old crop corn could stay the same or go much higher. And you have a similar situation setting up in beans. The primary difference is you do have a big harvest of soybeans in South America, but you've got 50 days worth of boats waiting to load out beans. The ports just are inadequate for the amount of shipping that needs to be done. That's why we saw China, a week ago, canceled a couple million metric tons, and you saw the result was the soybeans sold off almost $1, I believe, from their highs. And likely as not, you'll see the Chinese start to repurchase those beans at a much cheaper level, because the bottom line is there are real users out there. There are people that need the soybeans in China to crush. The crushing margins are decent in China right now, so they want those soybeans.
We got a caller. He's one of the better traders that I've ever met. He's from Philadelphia.
Okay.
His name is John. John, are you on the line now?
Larry, I am. Good day to both you and Rich.
Okay, go ahead. You have Mr. Anderson's attention. You can call
Mr.
him
Anderson.
though.
Thanks
he
so much,
Rich.
Yeah, Rich, thanks so much for making yourself available. Rich, I wanted to ask you a question about the new crop futures, wheat, corn, beans. Now, specifically, I had a question on wheat, but the subject is the price set for crop insurance that farmers can buy, and I do know that it's the February average futures prices that are used to set those. And my question, Rich, is this. Now that the crop insurance prices have been set, and I'm looking at July wheat in particular at $7.29, what impact, let me phrase this properly, how does the crop insurance price set by the USDA, how does that affect what buyers and sellers do with that new crop July wheat futures contract?
Well, you're right about the February average price being the price that they use for corn. I'm not sure you're right about the price for wheat being the February average. It very well could be. Now, there are two types of insurance. In last year in the corn, you could buy insurance that was just based on the February average, or I believe you could also buy insurance where it was based off of the average of February and the average of September or October. So the two. If you took the 2 month situation, you got a much better price last year. A lot of people didn't because it was a few dollars cheaper. That's the only That's the only difference. But the price that's set for the insurance allows the farmers to decide how many acres they're going to plant and know that their risk is minimal. They may still have some risk, but if they have a complete crop failure, or if we have a complete price failure, prices go towards historical lows, they wouldn't, go broke. In the past, before price insurance, if you had a crop failure, you could really be hurt. They're not necessarily going to make any money if they only collect insurance, but at least they know they've got a safety net and it won't go to zero. As far as how it affects the futures traders, the futures traders are mostly looking at world supply and demand. July is new crop for wheat. November is new crop for beans. December is new crop for corn, although September, last year we had a lot of early plantings in the southeast and the delta, and so actually we had some new crop corn in September. Because of the weather changes this year, it's not going to happen. Last year in Minnesota, we were having 70 and 80 degree days. We had below zero wind chill yesterday. And what tends to happen is if you get a decent price for your insurance, the farmer will tend to plant just a little bit more if he gets started early. Nobody's getting started early this year, not down in the Delta, not in the Midwest. And so whatever the number comes out on Thursday of next week, on the 28th, that'll probably be the highest acreage number we see for the year for corn. And in actual fact, in the southeast and the Delta, because of the rally in cotton is going to pull some acres away from corn. I don't know that it'll necessarily be reflected in the March 28th report, but in reality, the farmers will decide, well, I'm going to plant a bit more cotton and a bit less corn. But I don't think the actual floor that's set, the futures traders don't pay much attention to that. The only person that's really paying a lot of attention to that is the farmer, to know what his risk is if I'm going to plant this crop versus that crop. And that they do. Like a corn, and if I've got some acres and I can plant either corn or beans, I'll look at my insurance to decide how much risk I'm going to take. And Rich, by the way, that's really the only, the government subsidizes part of the crop insurance, and that's really the only way the government is subsidizing farmers these days, because the price supports are so below where the markets are today that they have no relationship to the market. But they do subsidize some of the premium of the insurance. But I don't think it affects the traders, Rich, how they're trading the futures.
Very good. Rich, I have to tell you, thank you so much for that discussion. That just listening to that brief story of yours clears a bunch of things up for me. So I find that very helpful, and thanks again.
All right. Appreciate it. Good talking to you, John.
All right.
Thanks for calling in, John.
Thank you, Larry.
You bet. Rich, you remember last year, it was around this time we were talking about planting intentions and stuff, and you and I were talking about, the potential for a drought from one of the trips that you had, we had gone, when you'd come to California to Pismo Beach.
Right, back in the 80s.
When Mark Douglas and Bryce Gilmore and all of us would get together. And as we were driving you back to the airport, which was a couple hundred miles, we passed Lake Kachuma, and it was almost empty. And I think it was 88, Rich, if I'm not
it was 88. That was
88.
Full year.
Yeah, and you said, well, there's going to be a monster coming, and I always remember that. And you were talking to us last year, about the potential for a drought, and that was right before Memorial Day, right before the market really took off, and we were watching the 61% retracement. Are you seeing any of the same things as far as the weather patterns or supply-demand indications that tell us that we could have another leg in this bull market that might take corn all the way to to $10 and beans to $20? Do you see anything like that could be out there?
I don't see anything yet in the fundamentals, but what I will tell you, because last year was a warm spring, we got the stuff planted early. This year it's a cold, we're going to get it planted late. Our subsoil moisture, we're still way behind. Last September, August, September, and October, we were 3+ inches below normal each month. And so we're 9 to 10 inches below normal subsoil moisture virtually in most of the upper Midwest.
Wow, that's
so it won't be hard to all of a sudden, things, but we've got snow cover, the snow will melt, so we'll have initial moisture to get crops started. but then we have to have the timely rains because we don't have the subsoil to count on. We used that up, and we haven't replenished that. I believe that in one of the next 2 years, we're going to have another major weather problem. Keep in mind, I went to South Dakota just after the 4th of July last year, and that was the best corn crop I'd ever seen. But it didn't rain a single day hardly after that, and so 150, 60 bushel corn turned into 20 to 80 bushel corn. But I don't see anything on the weather horizon yet.
But the conditions are there. In other words, it doesn't take
because the subsoil is so low.
Nearly as bad as last year to cause almost the same problems because of the fact that the moisture in the soil is so depleted in the strong growing areas.
Right. So it's not going to take much. I'm looking at the U.S. seasonal drought outlook from the NOAA, and the upper Midwest is looking green. It's better than it was. But as you go into Nebraska, the 2/3 of Kansas, the kind of the middle of Oklahoma, the middle of Colorado, you've got real major concerns. And then as you go further south and west, it's all a huge major concern. And any crops that are planted are going to depend on timely rains. And if you don't have the timely rains, all of a sudden it'll become a real big deal. But this U.S. seasonal drought, a guy can Google it. It's put out by NOAA. It was actually put out today.
They
it's their look for between now and June 30th.
Posted it into the Tiger's Den because he follows the overall fundamentals of the market along with the technicals, much like you do. So he gives a lot of information to the folks at TFNN and Tiger's Den, so that helps. And I think this it's available on the website too, because most of these shows are archived. So
right.
Well, listen, we're going to let you go because I know you're busy, but we'll have you back on in a couple of weeks, okay? And especially right after the report, because that'll be very, very important after we get the crop report on the 28th.
But by the way, I was just talking to our mutual friend Rick, before I came on the air.
Oh yeah.
He's talking about if we have an equal swing of the last leg of that corn, corn could go into the high 9s, and if we just rallied to 61%, it could go to I don't know if the number is 860 or something. So
yeah,
he sees some technical reasons why
Hey, listen, when you
and the fundamentals will follow.
Next time, ask him if he wants to come on the show to discuss his leaving of Citicorp. I'd
sure.
like to have him on. He said he could once his time of his silence period had broken, because I think it was interesting. After all those years, they came in on a Friday, gave him 15 minutes to pack up his stuff. I think that sucks.
That's the way it works. By the way, he has some interesting work out on gold. Maybe I'll forward it to you, and you can.
Yeah, I will. The fact is, I'll have to give Rick a call and get him on the show, because he's really pleasant and and I
humble guy too, very humble.
Yeah, oh God, he's so knowledgeable. That's for sure. Hey, listen, thanks a lot, Rich, and appreciate again your thing about Terra. That was really nice. So we'll talk soon, okay?
All right, take care. Bye-bye.
Okay, folks. We're talking about the corn market and where we are now. I posted in the Tiger TV the corn chart. We're going to take a little break here and then finish up the commodity with other long-term commodities. 877-927-6648.
TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, I'm going to end the show with a request from John in Philadelphia. Basically, what he asked for was to take a look at the corn chart on a little bit longer time frame. And what I did was I went back and I highlighted in a yellow outline or sort of an ellipse of what happened last year coming down into before we had the drought. And if you'll take a look at this chart and study it, I really think it would be beneficial to look at it because it's setting up just so beautifully that it just can't be any more clear, in my opinion. If you'll notice, last year from March all the way through June, there were so many AB equals CD patterns that were absolutely perfect. There was 1, 2, 3, 4, 5, 6 of them that culminated at the low of the year at $5.55 a bushel in corn, and it went to $8.30 a bushel. That's almost $15,000 a contract on an investment that's $2,000. So now, if you look at what's happening now, we have 1, 2, 3, 4, 5 AB equals CD patterns coming down in corn. And so what we're looking for now is corn could be topping right where we are right now, as long as it doesn't get much above 742. And if we can get down to that magical 666 level, I know that's the number of the devil, but that's the number that we're looking at in corn, and that is the price where corn was in March of last year when it had the sell-off before it took off. So that would be going back and touching that old high, and that's a very, very powerful thing. So we've got a lot of work to do in the next few weeks by waiting for this to unfold to see if it's going to do what we expect it to do. But if it does, then we have something that we can really have a potential for profiting on. And I've been looking at the CORN, and we're reevaluating that. That's the ETF for corn to see if because I know some of you folks don't trade commodities. You shouldn't be afraid of commodities because the only thing they give you is a lot of leverage. But you have to, leverage can be a good thing, and it can also be a very bad thing. So you have to be able to understand risk and know how to put stops in and a whole bunch of other things. And if you don't know commodities, you really need a broker type person, where you don't you can use electronic, but you also need a broker to tell you when expiration dates are coming and also when they're moving from one contract to another. It's a totally different animal. With Forex, it's basically the same thing every day. It's just moving money around. But with the commodities, it's a lot different. When I was listening to Rich talk about the knowledge that he has, I remembered because he used to, have cobwebs in my mind because he would have so much information, and I knew that was why I became a technician back in 1974. Is because I just got tired of reading all the stuff, the economic stuff that was supposed to move the markets, and all I'm interested in are the patterns. If it's going up, there's more people buying. If it's going down, there's more people selling, and that's the bottom line. But Forex is by far hands above everything in the whole world for trading because it's 24/7, 5 days a week, and it's got patterns all the time, and it trades really incredibly well off of the Fibonacci ratios and things that you have, and that's the main thing that you're going to look at for what you're really watching here. Daryl's show's coming on soon, so I hope you enjoy his show, and we will be back on the air on Monday, and we will certainly hopefully have some more good information. I am expecting there's a pretty strong cycle. It's one of these astro events that I'm looking at that is coming up on Friday, and it is quite negative. The last 4 times it occurred, very, very negative one, so I would not be long over the weekend. Well, for several reasons, but anyway, that's it. Live every day in an attitude of gratitude, and may God bless.